Welcome everybody to another episode of 10,000 Roads to Financial Independence. Today we have David Teo with us today, and David is a COO of a commercial real estate investment group called the Canis Major Incubator. He's also the CEO of Merlion Investments. So he focuses on helping investors basically finding multifamily value-add asset. And their company has acquired about $100 million in asset within 2 years. So it's probably growing as we speak. So very welcome you back to our show today, David. Really good to have you. Yeah.
Thank you, Elisa. Appreciate you having me on with you today. And you just reminded me that I probably need to update my LinkedIn profile. That was written, I think, about close to 2 years ago. So that number has actually doubled since then. Yeah.
That's awesome. That's awesome.
Yeah.
As I know, like whenever I read the LinkedIn profiles, the bios, they already get updated. People are like, oh no, yeah, like great, awesome. So David, walk us back a little bit more. We always started with our conversations by asking folks what what kind of influenced them in terms of when you first started in the beginning, actually. In your childhood, if you think back, the one influences that helped you become the entrepreneur who you are right now?
Thinking back, I don't think there was anything in particular that kind of spurred me on. I came from a family of business people, family of entrepreneurs.
Yeah.
It went all the way back to my granduncle, who ran a what do you call that? Textile business.
Okay.
And so that was sort of a family business, so to speak, from all the way from my granduncle. Granduncle, I guess that's how you address that. My grandmother's brother, basically. Yeah. So anyway, so that kind of got a few family members involved, and my dad, eventually got into the clothing business as well. So it's sort of been, always part of, I was born into an entrepreneurial family, so to speak.
Yeah.
But, I was originally from Singapore. And so I don't know, if anybody, who's listening to this right now has any familiarity with the country, but it is a country that emphasizes a lot on stability, on education. Get a good education, get a good job, get a good life, right? It's your pretty standard recipe for a comfortable life.
Yeah.
So even though I was born into an entrepreneurial family, for the big part, I was programmed to, go to school, study hard, get good grades, either be an engineer, a doctor, a lawyer, accountant, any one of those, and get a good job, and you'll be okay. So that was the path I took, and although I kind of got a little bored with where I was when I was in Singapore, so I decided that I want something different. I'm going to go to the United States to get my undergraduate degree. And so I told my parents that, and they at first was a little hesitant, but they said, okay, well, if that's what you want to do, we'll support you. So 22 years ago, I came to Austin, Texas, went to school at UT Austin.
Wow.
And, got my degree in computer science. It was just one of those things where, I decided on computer science, not because I have any specific passion or interest in it. It's one of those things that, I'm good at math, I'm good at science. I guess it's the easy way to go.
Yes.
Right. It's like, I really want to go to business school, but business school, it's great, but man, I have to memorize stuff for management courses, and I hate to memorize stuff, right?
Yeah.
So it's like, okay, never mind. Let's just get my degree in computer science and see what happens.
Yeah.
So anyway, long story short, I graduated, got a job. Well, I actually graduated at a really bad time during the dot-com bust.
Oh, yeah.
right in the middle of the dot-com bust. And given the fact that I was an international student, it was difficult for me to get a job. But I was fortunate enough to be able to get a job with a tech company here in Austin, and then went on to work for them for 12 years, right? So so throughout my childhood and my adulthood, there are a few tinklings of entrepreneurship. I just remember one incident. Now that you mentioned, thinking back to childhood, I don't know if there was such a thing here in the United States, but when I was a teenager, so McDonald's had this this giveaways.
Yes.
Every now and then they have this giveaways of this little stuffed animal or some kind of toys, and people would go crazy for them, right? So I would get people to go buy those for me,
Yeah.
and then I would just buy a whole bunch of them and sell them.
Yeah.
Sell them with a markup, right?
Yeah.
So that was my first foray into entrepreneurship. Certainly not something that is sustainable, but
Yeah.
I thought that was yeah. But anyway, so
On that. That's pretty great.
yeah. Oh yeah, and that reminded me about something else. When I was in college, textbooks were incredibly expensive, right? I mean, like those physics textbooks, $150, $160 per book. So then I would take the opportunity to go back to Singapore every summer, to have fun, visit family and whatnot. And I would bring back textbooks for my own use. And it was like, wow, the textbooks over there, we're talking about close to, more than 100% less, like something that would cost over $100 was like $50 over there.
Yeah.
And they're exactly the same thing. And, some maybe, paperback versus hardcover, things like that. But anyway, so brought back cases of them to sell.
They're like, sir, what do you have in that suitcase that's so heavy?
Oh man, you tell well. So actually, I shipped them in boxes. Thinking back, I should have bought container loads of them. But yeah. So I did that, a little bit of that, and then going to my quote unquote adulthood. When I was when I was working for the company that I used to work for, I think this was in 2010, and I got an itch to do something on my own, outside of that, right? Weekends and nights.
Yeah.
So I was working with.
Why do you think that? Do you feel like the job was kind of like just a job? Like, is it when you think back? Is that why do you think?
Yeah. I think it could be a little of nurture and a little of nature, right? So nature, maybe a little bit of it is ingrained in, it's part of who I am, but I don't think that is a whole big part of it. I think a big part of it is nurture, right? I mean, the experiences that we have throughout our lives. So I think, in that particular point in my life, I was bored with my job. It wasn't particularly interesting to me. It was an industry that I was starting to get bored of. I tend to look at it as, well, it's an industry where a lot of my customers don't really want to buy my products. They have to buy my products because of compliance, because of some regulations, because we're making security products for the government, for banks, and so on, right? So the feeling of trying to create products to sell to people who don't really want to use it, but are compelled to because of regulations, that doesn't really make me feel very good, right? So anyway, that led to like, oh man, what if I do this? What if I do that? So I was like toying with various different ideas. At one point I was thinking of creating a subscription box of baby food products, right? High-end baby food products, like organic food products, where every week or every month you'll get a box of something for you to try, and if you like it, go buy it for your kids.
Yeah.
So that was one idea. I did a lot of research into it, and then a very good friend of mine came along and said, "Hey, I've been thinking about this idea. And what did we do this?" So we started a social media marketing business. Back then, Groupon and all those were a craze, right?
Yeah.
They were very popular. So living social and all that stuff. So it was like we were thinking around that idea. Well, okay, so their idea is this, right? These are all the problems with their ideas. Can we come up with something that would be better than them, but also be able to tap into the desirability of what they offer to the consumers? So anyway, we launched something. We were fairly successful. We got a bunch of customers. We got a bunch of consumers who signed up with us. And then we decided to stop that because my first child came along, and we decided that oh man, now is not the right time for me to pour all my time into this. And so that was the one. And also we kind of got into the understanding that in order to scale that business, we got to totally revamp. We got to totally shift away from the model we had. So at that point, we decided that okay, let's just cut this loose, and we'll see what happens next time.
What happened to your customers at that point? Like when you decided to do that, I would imagine it's a very difficult decision for you to make.
It was, yeah. So some were paying customers, some were not. We brought them on and have them use our service for free just for them to experience the value of it.
Yeah.
But there were some paying customers, but it's a subscription model. So we just, deliver the value up to the point where they have received the value of the subscription for that particular month, and then we start from there. Yeah. Yeah, but it was difficult. There were a few customers who were like, "Wow, you guys were onto something." So yeah, but we're not making any money.
Yeah. That's very important. Great lesson to learn, which is like the profitability of a business is very important.
Yeah.
And at what stage do you kind of put a plug on that? Obviously, there's personal reasons over here as well.
Absolutely.
That's great.
Absolutely.
Yeah. And so tell us a little bit about your first investment into the foray of real estate.
Yeah. So I decided to go into real estate. This was like a few years after this startup experience. So just a few years, 1 or 2 years after. Again, I felt like, oh man, I gotta do something. And was looking at various different things. And then a friend of mine, I had coffee with a friend of mine and said, hey, I want to do something. Throw me some ideas. And it's like, have you ever thought about real estate? And at that point, I had one rental house.
Yeah.
And that was the house we used to live in, right? So it wasn't a conscious decision to buy a rental house, even for that one. So I said, well, I don't have any experience. I've bought several houses for my own use in the past. And so I said, well, go look it up, real estate investing, right? And, so I went to a workshop, a local workshop that's conducted by a local group where they were conducting educational workshops for single family investing, right? Flipping houses, buying wholesaling and all that stuff. So I got bought into the idea. I was like, wow, this is, I could do this. And so I, joined a group and started applying what I learned from that, and started making some money, right? I started my real estate business flipping houses.
Right.
And so, call it right place at the right time. Austin, Texas, at that time, even now, was a great market to do that. Deals are flowing, were flowing freely. I was able to get deals pretty easily. And so it was pretty easy, right? And then, I guess, at this point I see a pattern in myself, right? I tend to get bored with things pretty quickly and
So
and
the
try to
nurse,
try to see what else can I do, right? What else can I do? So like, yeah, about a few months after flipping, I think I maybe flipped 7, 8 houses.
yeah.
Not a whole lot. I did that over a span of a year and a half, and I was like, okay, well, this is nice, but I can't really scale this. Flipping houses is extremely hard to scale. And so I began to look at something else. And well, not only that, but at that point, competition was heating up amongst investors, and also because of how hot the market was, leads was uh, becoming hard to get into. So I was like, okay, well, let me step into development, right? So then I did infill development. So instead of just flipping houses, I'll buy lots, infill lots within the city core,
Mhm.
tear down one unit and build as many units in its place to sell. And so for that, in the city of Austin, it usually means you can only build two, right? Because of their zoning code. And so tear one down, build two, and then sell them for profit. So my goal at that point was to maximize capital,
And you
not
quit
so
your
much.
job at that point, right? You quit your job at that point.
Oh, yeah. I quit my job. Yeah, I forgot to mention that. I quit my job halfway through my first flip.
Gotcha. Okay.
That was yeah. So that was how badly I wanted to do something different.
How did it kind of
So
lead to that? Is it the confidence of you feel like the deal flow confidence kind of gives you and that can supplement the job, or kind of what's going on
um,
with the unit
yeah.
there?
So that's a great question. So at that point, excuse me. So at that point, I was halfway through my first flip, right? So I wasn't even done with my first flip. And so I was projecting to the end, okay, well, looks like I could sell it for this much, and looks like I'm going to be making this much profit for this from this transaction.
Mm.
And so I was looking at that. It's like, well, I was doing the math. If I make this profit from this one deal, if I just do this number of deals a year, I easily cover my annual income
Mm.
from my job. But at that time, it was also a leap of faith because, um, well, as you know, in real estate, everything boils down to deal flow, right? Everything boils down to deal flow. And so deal flow was actually starting to slow. Like the people whom I'm getting deals from, the quality of the deals are getting less attractive,
Mm.
meaning smaller margins and smaller margins and smaller margins, right? Um, but at that point, I'm thinking, well, I gotta take the leap of faith and believe in myself that I can make this happen. I don't think I'm a dumb person. I think I'm fairly, intelligent and um, problem solving, right? That's what it is.
Yeah.
So decided that, okay, let's take the leap of faith and
Mm.
quit my job and go into this wholeheartedly and focus on it and make things happen. Yeah.
Yeah. That's awesome.
And
So
uh,
you went from single family flipping to development. And now can you share with our viewers like the things that you have to kind of learn to kind of scale to the next next set of projects?
yeah,
Essentially, like how did you kind of went about each transition from
sure.
activity? Yeah.
Yeah. So a big part of it is education and network, right? So when I say education, I mean like learning from people, right? So like, going into flipping houses, I learned a lot from the group that I was a part of.
Yeah.
And then, going into development, there was more figuring things out as we go along, right? So I know people who are already doing this, and there is a local uh, trade group, if you will, right? So in the Austin area, it's called the Austin Infill Coalition. So it's a group of people who are doing similar things.
Mhm.
Decided that, hey, we're better off getting together, share ideas, and so on, right? So it's just like a local forum, if you will. So that allows me to kind of, if I run into any issues with the city in the form of like, hey, permitting runs into some issue or getting approval for this and that, there is a group that I can go and say, hey, have you guys ever run into this? How do you resolve that, right? So there is comfort in that, knowing in knowing that there are people who are doing similar things that have a lot of more experience than I do. So the key point is always associate yourself to people that have more experience than you do, and more skills than you do, so that you can get help from them. But always be mindful. Don't just be a taker, right? Always try to find ways to give back, right? Give back. Whatever ways you can give back value.
So give us some example of that giving back. I love the point that you just talked about over here. With giving back, because it can't just be a taker. So what are the stuff that you kind of give some examples of what you're giving back? Because the person who's more expert, oftentimes that you feel like you're not in the position to help them.
Yeah, and usually, it's always an assumption, right? We always assume that people who are more successful, more experienced, they have everything. They don't need anything from me. What can I offer them, right? But a lot of times, all it takes is just to have a very open conversation with them, right? And you'll be able to find out, like, oh, okay, well, this person needs this. Oh, this person needs that, right? So sometimes, one specific example in my case was there was a particular investor at that time. I think there were two incidences. One was that his framer had suddenly gotten so many jobs that they weren't able to work on his project on time. And I have my framer who's been very consistently doing a great job for us. So I connected that, right? And then another case was funding, right? One of the more experienced guys, was running their project, was launching a new project, and they were short of some funds. So I connected them with some of my investors, right? Investor friends, right? Or my investors who invest with me and help them out in that way. So I, the key thing is take them out for lunch, take them out for drinks or whatever, and talk with them openly. And everybody needs something. Everybody needs help in something, no matter how experienced one is. So sometimes it may be something that I or anyone I can help, right? I don't have the capacity to help, but I may know of people who might have the capacity for help. So I would say, hey, it sounds like you need some help with that. I don't think I'm in any position to help you with that, but I think there might be somebody I know in my network that may be able to give you a hand on that and make a connection, making connections. Yeah,
that's awesome. Yeah, that's great wisdom. Definitely is a one way for sure to get some more hours from people who are a lot more experienced. So kind of fast forward, you went from single family fix and flip, and you realize it's kind of like another job, right? And then go into development. And how did you come about multifamily, and how is these type of investment kind of different than the previous ventures that you went into?
Yeah. So one thing I want to mention is that activities like flipping houses, don't get me wrong, it's a great activity. It's a great business to have. I think a big part of it is personality. Some people like flipping a few houses a year and make great money from it. I was more into creating an operating business that I could scale, that I could then step back and run it, as well, with people working on various different parts. In flipping, yes, it's possible to do that, but it's quite challenging to make it happen, especially if you want to do it at a large scale in different geographical areas. So that led me to, to the point where I was thinking, all right, so what is the next step for me, right? What would make sense for me to go into, right? So now if I were to stay within the realm of real estate, what is the next logical path? Well, the next logical path is commercial multifamily, right? Both, between multifamily and single family, there's a lot of similarities, but there's also a lot of differences, right, in the way they are conducted.
Okay,
Um,
give us some examples of that.
Right. So the fundamental concepts are very similar, right? Buy, increase value, sell, right? The differences are that for multifamily, well, you're flipping property, but you're flipping across several number of years, whereas flipping houses, you're flipping it within a few months. So that's one, so that's one distinct difference, right? And secondly, one of the major difference that really attracted me to commercial, in particular multifamily, is that the multiplier effect of value increase, right? You do something you do something that will cause an increase in the value of the property. And because you're talking about many units versus just one house, right? Compared to single family, that one thing that you do gets multiplied across each and every one of the units. And so every action that you take, I feel, is more efficient, right? Like, you provide one input, and that input benefits all of the units and has a multiplier effect on the value increase of the property,
Right.
versus one house where, well, it's just one house. Your efficiency is only to that house, whereas the efficiency that you get in improving the value of a multifamily is it gets multiplied across, right? So that's another distinct difference. And also the main difference for me is multifamily, you compare it, I wouldn't say it's easy, but relative to single family, it's easier to outsource every single piece of the operation, right, of the asset.
Yeah. And then kind of watching the financial, as an asset manager, watching the financial.
Correct. Yeah,
Yeah.
that's a very key. Yeah, certainly when I say outsource, I don't mean like, that's it. You go check in 5 years later.
You can do
Yeah.
that. That's
In the ideal
do
world, yeah,
that.
in
We
the
would
ideal
like to
world.
know you, because then we'll buy properties from you. Uh,
That's right, right? Yeah, that's right. Yeah,
um,
hopefully, no, thankfully not.
yeah, and that I understand that you have been sitting on a board with a lot of funds and fund of funds. You're actually very well versed in the financial vehicle of fundings and etc. Can you tell us a little bit more about, okay, so you got into multifamily, and then how did you kind of find this is like your niche, which is
Yeah.
dealing with investors, dealing with fund, and the actor as their best custodians?
Sure. Yeah. So when I moved into studying about multifamily specifically, right? So when I cross over from, well, I shouldn't say crossover, because I'm still involved in single family. I'm still working with people to acquire single family houses, right? Not in Austin, but in other markets. But so when I expanded into commercial, the first asset class was multifamily, because it makes a whole lot of sense. It's the next step up from single family.
Yeah.
And then, after spending some time studying it, I got involved with the group that I was a part of, which was focused on single family. There was a bunch of us who decided that, hey, we need to set up a subgroup that is that is focused on commercial. And so I took on the role of COO for this group, essentially to help start that up, and to run that group, right? So essentially we're a group of individuals, investors, who collectively invest in multifamily deals, which that was the initial focus. But now we're pretty agnostic. We look at anything that makes sense, right? Commercial real estate. So it could be self storage. It could be what do you call that? A medical office, or mobile home communities, RV parks, and so on. So, but multifamily is our roots and continues to be a heavy focus for us. I mean, because it's one of the asset classes that will never ever go away, right? It's rooted in need, not in want. So yeah, so So going into, so that kind of was the beginning point of me looking into funding, right? Funding deals, because, okay, well, we're a group of investors, we're pulling money together. So doing what I do for this group, I look a lot up at compliance, right? What the regulation says about raising money for deals and so on and so forth, working with others to raise money and so on and so forth.
Right.
And what's the right way to do it? What's the wrong way to do it? And staying on the right side of the law, right?
Yep.
And so, also as I mentioned to you earlier, that I was originally from Singapore. There is a whole other world there where I have a lot of connections there, relations and so on, that people have a lot of money and they think, hey, United States, this is a very stable country to invest money in. So that it was doing one of the trips back to visit family, that I was like, well, what if I start a fund to bring foreign money in, Singapore money in, and place them in assets here. So that's kind of what spurred, well, triggered the initial idea of starting a fund to do that. This was actually just before COVID, right? And then so this was 2019 September, and so I was like, okay, great. Let me go do some investigation on how to do this. What will be the tax implications? What will be the legal implication? Right? So spent several months digging into that, talk with a bunch of attorneys and so on, right? And then COVID hit. So at first it's like, oh, COVID hit. Great. This will be the perfect time to start a fund, because I would have all the dry powder ready to go acquire deals left, right, and middle, right? But I think we all know that really did not work. It did not
Right.
work out that way, right? Because
Half of the deal you continue to be very.
right, yeah, the deals were not like flooding out of. It wasn't a floodgate of deals, right? So there was a group of investors that I was continuing to be talking to, educating them on investing in commercial real estate, and share with them my plan. And as the quarters go by, the last several quarters, I informed them that, well, I'm going to put the fund idea on hold, simply because that was going to be focused on multifamily, right?
Right.
And
Right.
so my point to them was that we're going to look at deal on a deal by deal basis. We're not going to raise a fund and try to go grab whatever deals that come in, right? Because right now there's the floodgate of deals that I was anticipating did not happen, and doesn't look like it's going to happen. Fortunately or unfortunately, right? Unfortunately for me, but fortunately for the economy and for everybody else. So that's a good thing. But anyway, so where we are with that is that then, when the right deal comes, I'll inform all of you, and you can then decide if you want to invest in the deal or not, directly into the deal as opposed to into a fund. Yeah. So by having said that, I have worked with several other investors, where each of us have our own people, our own group of investors that have invested with us previously before in our deals, right? So we got together and fund a deal. And the way we did it was we actually created a fund in which each of us partners brought out investors to invest into the fund, and then the fund then invests into a deal, right? And then as far as our investors are concerned, their return is the same as what they would get if they were to invest directly into the deal, right?
So no difference
Yeah.
up there, but it gives you a little bit more protection for folks who doesn't know. In the SEC room, it gives you a little bit more protection with their
Exactly.
investments as well as with the deal.
Exactly.
Yeah, so that's great. And then you mentioned to me that you're doing some other asset types. So my question for you is that, because I only do multifamily. So and I feel like my head's already spinning doing all the stuff that there's to go around. So how do you actually be able to kind of scale to different kind of asset type and looking at them agnostically? Because there's
Sure.
intrusively certain ways that I'll analyze them. Every asset is kind of different in terms of analyzing them. So how do you kind of scale it that way in terms of it being able to kind of look across different investment types?
Yeah, yeah, sure. So for the most part, the way that they're analyzed from a mathematical or financial perspective is the same, right? We're talking of the same thing with cap rates, NOI, and all of that. And so what's different might be the dynamics of who are the tenants, the nature of the type of leases. So those will be the key differences. For example, I would say though that if you master multifamily, everything else is easy. It's easier, right? Because multifamily is one of the tougher asset classes to master. So it's a great one to master because once you master that, everything else you'll find that, oh wow, it's that easy. I mean, I'm exaggerating a little bit, but the key point is this: from a financial analysis, from a numbers perspective, the way we analyze it is the same, right? So whether we're talking about mobile home communities, whether we're talking about self-storage, whether we're talking about medical offices, they're all done the same way. The distinction between them, like I said, is who are the tenants, the nature of them, right? And also the leases, right? So, for example, for multifamily, right? Usually, well, not usually, always it's consumers,
Right.
individuals. They're the tenants. And then the lease is usually a year, right? Maybe sometimes a little shorter, sometimes a little longer, but usually a year. Whereas on the other end of the spectrum, if we're talking about medical office, which is one of my key focus right now, which is medical offices, we're talking about the tenants being, well, healthcare providers, right? It could be a dialysis center. It could be a standalone emergency room. It could be a primary care physician or a collection of them, right? Dentists and so on, right? Or you know, the rehab center and things like that. And so these are generally, well, these are usually, right, not individuals, but companies, corporations. And the only exception will be a medical office with a number of primary care physicians, where then you might be leasing to them one-on-one. But in most, yeah, so the ones that I like is a medical office that is tenanted heavily by a regional healthcare provider, right? Maybe like a Baylor, Scott and White. In your part of the country, I'm not sure what are some of the healthcare providers, but regional to me here in Texas, there are some of the regional hospital systems where to have them as tenant gives me a lot of comfort, because the likelihood of them going bust is very low, first of all. And secondly, the one other distinct difference is that the lease are usually for a minimum of 5 years, right? 5 years, 10 years, sometimes we even have 20-year leases. And one other distinction is quite often there is built-in rent escalators, like 2%, 3% per year increase in the rent that's built into the lease. So in that case, I don't have to guess what will be my income 5 years from now. I don't have to guess. It's written in the lease. And then usually it's a triple net, sometimes an absolute net lease. Basically, that just means that the tenant pays for all the expenses. I, as a landlord, may only be responsible for, say, if I have to replace the roof, if I have to resurface the parking outside the building, if I need to replace some plumbing, so that will be my responsibility. But the day-to-day operating expenses are all the tenant paying for it, right? So it makes things a lot easier to manage, and also to underwrite, right? The underwriting for this type of assets it's a lot easier, I would say, compared to say underwriting some other asset classes like hotels or multifamily.
Mm.
Um, but multifamily is one of those asset classes where once you gain the knowledge, it's pretty easy to do, right?
Yeah.
But yeah, I mean that's some of the key differences. So as I said, right, once you are familiar with multifamily, going to some of these other assets actually is it's pretty easy, to kind of learn what is unique to them.
Yeah.
Yeah.
Yeah. But obviously, you say it's easy, but when you actually implement it, there's different parties that you have to get to know each other.
Oh yes, yes, yeah,
Using
for
that
sure.
to essentially setting up the team is the biggest work that's kind of involved in any business. That's
Yes,
great.
yeah.
Awesome. So what is your goal or your company goal? Because now you're kind of reaching to a point. If you would not to work tomorrow, you'd probably be still okay. So what is kind of then drives you after you kind of reaching that breaking point? Um, you know, can you kind of share with us?
Well, so my goal is to continue to focus on need-based assets, right? So need-based assets, I categorize that as assets like multifamily, right? It's roof over people's heads. It's based on need, not on wants. And medical office, it's based on need, not on want. Healthcare, everybody gets sick. Everybody, at some point will need to see doctors, right? So those are all need based, right? And then self storage. Some would argue that it's need based, yeah, kind of in between.
Yeah.
But for most people, for a lot of people, it's actually a need, not a want. My going to your question. I want to continue to expand into diversifying across this need base, right? Because as I mentioned, I came from a single family beginning, and then multifamily. And fairly recently, only last year, that I started looking into medical offices. And so my goal, for the immediate goal, in the short term goal, is to continue to acquire more medical offices. And also, one of the things that I started looking at last year was development, right? Developing residential product, need-based assets. And so, because as I was observing the market of deal flow of existing multifamily assets to acquire, at least in my part of the country, in my city specifically, within the Austin area, the area, that it makes more. It's becoming more and more reasonable to develop versus to buy existing. Because generally people consider, developing from scratch is higher risk than buying an existing asset, right? Because it'll take you 3 years to build something, and who knows what's going to happen during these 3 years. Demand could go down, blah blah blah, right? So seeing how the market has moved from from the perspective of buying existing property, the prices kept going up, cap rate keeps going down, right? That I believe have come to a point where there is risk parity between development and buying existing at this point, because prices has gone up so much on buying existing that now it makes a whole lot of sense to develop. And yeah, in the Central Texas region, where population keeps on piling in, the risk of demand slowing, not that there's no risk, but it's lower compared to everywhere else.
Sure. That's what you need to kind of look at.
Yeah.
And I guess come to our last kind of question. Well, I have to ask, what is the lumber cost that is causing it? Does that change any of your business plan in terms of new development? Because I think,
Yeah.
you know,
Yeah.
it-
So certainly that's a big consideration. And lumber prices have shot through the roof, as we all know, right? Last year, and Well, there are some that are thinking that second half of this year things will start to look somewhat will start to get towards being normal. So we'll see, right? But some other people say it will be early as 2022 before things start normalizing. So we'll see. Because so when it comes to land development, obviously a big part of it is securing that piece of land, right? So that's something that will take time.
Yeah.
And so right now, I'm actively looking for opportunities to acquire land in the Central Texas area, right? So uh, uh, the point is that once you acquire the land, the work to get it ready for construction will take, depending on where you are in the country, right? The Austin area happened to be one of the toughest area to get things done
Yeah.
from a permit entitlement perspective. So it'll be at least a year and a half, 2 years before I even can get the permit ready for construction. So that whole process, from the timing perspective, by then, hopefully, we're getting into a normalized state when it comes to material costs.
Yeah.
But then we also got to factor in the new administration driving increased infrastructure spending, right? Development. So there will be competition for labor. So labor cost is going to go up. So we got to then, in that time frame, got to factor in, some factor with regards to how much do we want to factor in for increase in labor cost 2 years down the road, right? Nobody can tell for sure. It's going to be a guesstimate, right? Educated estimate on what it could be. But that's something that anyone who's looking to development needs to consider, because labor shortage is going to be very real, right? Yeah.
Right. And then also policies of minimum wage. But then that would
That's a great point too. Yeah.
which also means you're probably going to sell for more anyways. So kind of probably nets out.
Yeah.
Well, that's great. We're coming to the end of our interview over here, David. Thank you so much for your time. Our last question we always have for a guest is, because you have children, so we're gonna ask you this. So what are you doing right now to kind of teach your kids about financial literacy, and kind of making the financial decisions for themselves?
Yeah. I have to confess, I haven't done a really good job with my kids on that. But one thing that we try to do, right, is that whenever our kids ask for something, well, it has to be earned, right, and not just given freely. So if they say, hey, I saw this toy that I want, and by the way, just for context, right, my kids are 10 and 4. So certainly a different conversation for someone who's like 19 and 18. But I guess the concept is similar, right? But the key point is that nothing comes for free, that everything has a price associated with that. Kind of teaching them the value of money. And so that, I feel like that's the first step. If they feel like, okay, if I want something, I need to have something in order, I need to have something, in this case, money, to buy that thing.
Right.
Then it leads to, well, how do I make more money? Right. And our focus is not so much of savings. Focus is on how to make more. Right. So a big part of, I'm generalizing here, but the Asian culture in general, right? Obviously, not all Asian cultures. Maybe it's just from my community. Emphasizes a lot on saving, right? Oh, spend less, spend less, spend less.
Yeah.
So I feel that yes, that's kind of important, but that's not the whole point. The point is make more. If you make more, then spending less is relative, right? So if you, the focus should be, how do we make more? How do we make more? How do we make more? Then the amount that you spend is just inconsequential, right? So that's the focus that we try to instill in our children. Yeah.
Awesome. That's awesome. Well, thank you so much, David. And how would people find you if they want to kind of connect and follow up with you? What's the best way?
I guess the best way would be I'm on Facebook. People can find me on Facebook, David Teo. There may be a lot of me, but otherwise, by email, Elisa, I
Yeah,
mean,
I'll put
can
it in.
I?
Yeah, go for it. Yeah.
Yeah. So yeah, yeah. So my email is David at Merlion Investments with an S.com, right? Merlion is instead of a mermaid, it's a lion who happens to be a mermaid. So Merlion, right? That's a symbol of Singapore, actually. I stole it from that. Yeah, merlioninvestments.com. So David at merlioninvestments.com. Yeah.
That's awesome. That's awesome. And then to check out more information about you, where do we find it on the websites and etc.?
So I don't have a personal website. And the investment group that I run, Canis Major, Canis Major Incubator.com. So that is yeah. I mean, you'll find my profile on there. And LinkedIn. I'm on LinkedIn, although I don't check the messages there. So if you can find me on Facebook,
Yeah.
so David Teo, Austin, Texas. I think there's only one of me. Okay, David Teo in Austin, Texas. That's the best way to find me.
Yeah, and I will put that on the show notes for the folks over here as well. Thank you so much, David, for your time. This wraps up our another episode, 10,000 Roads to Financial Independence.
Thank you, Lisa. Thanks for having me.
Awesome.